Where's the setup? Dang it. Bet. Okay. I think that's it for value gap. Value gap right here. 5 minute, 15 minute for value gap. Boom. What is that? What is that? Oh shoot, it's exactly this high right here. Wait. That's an easy liquidity. Wait. Sorry, buddy. It's nothing personal. Bottoms up. This is basically liquidity. Yes, just like that fly, liquidity will sit in very obvious places, like maybe even this cologne right here that Angel got me. Shout out Angel. Or it could maybe even be in this smoke detector right here that I had to take down. Yes, I had to take it down. It wouldn't stop beeping, don't worry. Or it could even be in these nice, cool sunshades I have on. What is a sunshade? I don't know. Sunglasses. Looks good? No? Okay, I'll shut up. This is my third time recording this action. Oh my gosh. I just wanted to talk to you guys. Sorry if I sound burnt out, bro. This is my third time recording this. I don't want to record this again. I hope you guys enjoyed the intro. I know I did. It was pretty okay to make. Yeah, I really don't want to record this again. I kind of just want to put up that 1 minute video for no reason. Okay, but we're going to do this. Oh my gosh. Okay. Equal highs, blah blah blah, blah blah blah. Video's done. Video's done. Alright. In all seriousness, I'll be talking about highs and lows. Dude, this is gonna sound alright. I'll just say it. I'll be talking about highs and lows in the market. Liquidity. Basically a whole bunch of beginner stuff because I don't want to go down to advanced stuff with you guys yet. Equal highs basically just means after we made a high, the next high. After we made a high, the next high basically just doesn't sweep it out and it's at the same price point. So we have a high right here, a high right here on the lower time frame. Just imagine both these are highs. Boom, high, boom, high. Now what happens at highs? People short at highs because some people actually genuinely just see, hey, oh, we made a high. What is that? We made a high right here. Boom, short. High, short. Some people do that. What is this? High, break your structure, boom, short. Some people just go off. Shoot. What is that? Sweeps. Is that a high? That's some liquidity? Oh yeah. Do that, okay? This is some easy liquidity. I don't even need that. Because the market runs on liquidity. Now, when price gets right here, we have a high and then we have a high. Short people basically like kind of think that boom, we're reaching these highs again. So a whole bunch of limit orders are basically already right here as soon as we reach these point of a high, because what do highs do? Highs have high chance of reversal. So people have already put in limit orders, boom, right here, or have already planned on selling, boom, right here before this high was even made. Okay, so that's basically the core of equal highs. Is the reason why equal highs work is because at almost every single high, people put in limit orders at that high. Okay, and what are limit orders? They're basically let's just say they're basically sleepers. Okay, they're basically sleeper agents. Okay, people put in basically sleeper agents to whenever this price points get hit, boom, this price points get hit, they come in, they enter, they short. A lot of people are shorting right here, boom, bullish pressure down. Now what we do for confirmation is at these highs, boom, we know basically when you get acquainted with the market at every single high, you're gonna note it. You're literally just gonna look at them. You're just gonna look at everything, and you're gonna automatically see that it's a high. Okay, so we have a high right here, boom. Now, what do we do after a high? We look for our continuation confluences, and we look for our confirmation confluences. One of our confirmation confluences was, I have not shown you guys yet, but basically the one we're going to use is called a break structure. Now, a break structure is basically a low going past another low, but it has two candle. Okay, now we have this move down, move up. For this to be a break structure, this has to close below close. Okay, this has to close below this low. Once we close below this low, boom, market has flipped. This is basically telling us that, hey, we have the potential to be bearish. Every single confluence somebody knows. Okay, this goes for every single literally every single strategy. Every strategy has a chance to not work. Okay, that's kind of trader knowledge. But every single confluence, every breaker structure, for value gap, POI, literally every single one, PD array, anything you want to think of has a chance of not working. Okay, so we have this high right here, boom, high right here, breaker structure. We mark out air for value gap, boom. Now look at this. Price comes into our box. I'm not going to call it for value gap right now because I don't want to confuse you guys. But price comes into our box. Okay, we're just going to call these reversal boxes. Price comes into our reversal boxes after sweeping a high and breaking a structure. Boom, comes into the reversal box. We get a close. We get a close, not wick, not comes into it, doesn't close out of this. We get a close out
so
of
I got
it.
that. Now I just have to edit it.
Then
Put it in
we
here,
short, okay?
edit it,
And then we short. Now, because a lot of people probably, when this move down was happening, this is basically what happens. Okay, we have a high, equal high, boom. A lot of people came into the market, boom, they short. What happens when a lot of people short? This creates an imbalance in price action. Okay, this ties into what I'm trying to teach you guys is imbalances and for value gaps. I'll teach you that, but this basically means, let's just say two people sold and one person shorted. This creates an imbalance. Okay, then it scales up to like 1,000,000 people shorted and only maybe 1,000 people bought. So this creates a very big imbalance in the market, and this creates this candle right here. Now, what happens when you have an imbalance? Okay, you want to stop some of those people out, because once you have an imbalance in the market, price starts moving very, very weirdly. Now, boom, come up here. Now, what happens why does this box work in the first place? A lot of people already shorted right here. So what is market going to do? Market's going to push back up into this. A lot of people are going to start shorting at this because we're very close to this high and people don't want to miss out. Okay, so we're very close to this high where people have physically shown, you can look on the market, it's literally telling you, boom, people have physically shown they want to sell in this price action, in this price point right here. So what does market do? Market's boom, creates an imbalance in orders, boom, pushes back up into that imbalance of orders where previously a lot of people sold it, boom, pushes into it, close below. Then this is where we enter for our strategy. Boom, we enter. Look what price did. Completely dumped down. Anything in the green, by the way, is basically profit. It has to get below the green. Boom, below the green. Could have targeted right here. Boomski. Boom, drag down, or safer option, boom, target coming on two positions, coming right there. That target gets hit. We move after take profit one gets hit, we move it down, boom, move to break even, then we target TP2. TP2 can be right here, or you can just let it run for however long you want. It's literally just gonna be that easy. Okay, guys, I just showed you working in real time. Not real time, but you guys get. I probably would have took this. Not even probably. I would have seen this trade even if it was off trading hours. But this is basically like the key to just unlocking your inner trader. Okay, once you guys get on the charts, once you guys do this over and over and over and over again, okay, this is gonna become like literally It's gonna become like clockwork for you guys. You guys are gonna see this. It's gonna be so easy, and I can't wait for you guys to get there. But always remember, the reason why this, I'll explain this block again. Maybe some of you guys didn't get it. The reason why this block works is because, boom, what did price do? We showed a lot of people selling right here. We open up this block right here because what does this show? We have no wicks in here. Now, a fair value gap needs 3 candles. Boom, bottom wick of the first candle, top wick of the third candle. Boom, mark that out. A lot of people sold right here. What does price want to do? Price wants to get back in here, collect some more sell orders in order to push market down. We, boom, come in right here, target whatever we want. As you could see, it worked very well, actually. So that's all I wanted to show you guys. I am sorry I sound like really unenergetic because I've recorded this 3 times. And I hope I don't have to record this a 4th time. But that's gonna be in. I hope you guys enjoyed that little short skit I did at the end. That took me about like 3 hours to make, and my mouth hurts from talking for 30 minutes straight, having to record the same thing over and over again. So I'm gonna let you guys go and give my mouth a break. Pause. ASR trades out. Don't forget to like and subscribe. And I'm gonna see you guys in the next one. Bye bye.